So whether you're looking to finance your first vehicle or your next vehicle, you're just looking to be as financially prudent as possible and looking to maybe see which option is going to complement your financing options when it comes to buying your car the best. We're going to talk about in this video whether you should be looking at banks or credit unions or going directly to the dealership, pros and cons in each camp, and maybe how you can make that decision uniquely for yourself. So let's start with the benefits from the dealership side. On the dealership side, you're going to be looking at the benefits of being able to get it done the same day in the vast majority of cases when it comes to financing. Whatever they can do for you, you're going to know that day. So processing is typically quick. They're going to usually have the flexibility to finance vehicles that banks and credit unions may not finance. You know, many banks and credit unions, because they want to get back some kind of reasonable collateral if they have to collect, will not allow you to finance a vehicle with certain miles or certain years old. So dealerships neutralize that issue. They will likely offer financing on the majority of cars in their lot, minus their cash cows, their $2,000, $3,000, $4,000 vehicles. So the other side of the equation, banks, credit unions, is going to be, banks and credit unions are going to be, in most cases, more cost effective. There's not going to be any likelihood of any markup or fees around that, like dealerships are more likely to have because they're trying to make more money off of the financing. Your credit union or bank is going to give you a pretty straightforward rate. You also have to consider the component of relationship banking. You may be eligible for some kind of perks, discounts on the rate or the cost or application cost or something like that on doing the loan with the bank or credit union. They offer many incentives a lot of times around financing or refinancing vehicles with them because they want that business. Processing can be drawn out with banks sometimes. You may not get a straightforward answer. And you could also end up in a scenario where you have to actually go into the bank and deal with this process, off and on for days or off and on by phone for days. Some banks on the other side of that equation, like bigger commercial banks, may have online only applications and you don't get the opportunity to work with a human being. So you have to kind of weigh that in based on who you're banking with or who you're considering taking that loan down with. On the other side, again, with dealerships, they are going to run your credit against multiple lenders. The pro of that is you'll have, financing options available, even if your credit is not in the best shape. Versus banks and credit unions, they're probably going to have a pretty solid threshold of whether or not they're going to offer you financing based on your credit and income. The problem with the multiple lender situation on the dealership side, that option is they're going to likely pull your credit multiple times because it's various lenders. There's typically not a one hard pull that will be applied for all of those different lenders, and it could be a dozen different lenders. What ends up happening is each one of those lenders is going to pull your credit. They're running through each one of those lenders, and it'll be a hard pull in every case. Now, FICO states that if you are applying for, home and auto loans, that typically hard inquiries done in a short window of time from the same source will likely get counted as one and not hurt your score in the same capacity if those, 10 or 12 inquiries were caused the same, as individual inquiries. That having been said, even if it doesn't necessarily damage your score, you still have to think about going to other lenders for other lines of, credit, other forms of credit, and them seeing all of those inquiries and them maybe not being as lenient or open-minded as FICO about seeing them. So it's something to keep in mind. It's very notorious to come out of a dealership after applying for finances and to have 5, 10, or 15 hard inquiries on your credit report. And again, maybe FICO calculates that in as they state on their website and form, but lenders that you may be looking to do business with down the line after that auto financing application may not be as flexible. So what will help you make this decision is you need to basically decide first off which vehicle you're looking to finance, or at least the quality of vehicle. You might be able to make an easy decision if this is a vehicle that most banks won't cover or credit unions won't cover. Where's your credit and income? Do you need a lot of assistance in the financing department because you either have poor credit or low or poor income? or unstable income or something like that? Are you not lendable enough to go into a bank or credit union and get fair terms and rates, right? If you're in a good financial position and you can go in, to your local institution or whoever you do your most banking with and go in with them, you got the financials in order, you're likely going to come out smoother. You're going to probably have one simple application. If your credit and your finances are in order, your income is in order, you'll likely get your approval that you're looking for at a very solid rate. You're expanding your banking relationship with that institution, which, trust me, is rewarding. Even if you don't see it immediately monetarily, that's all very rewarding when it comes to relationship banking benefits and expanding your relationship, your banking wise, with that institution. And it looks good on your credit report to have a solid, notable bank on your credit report. So that's all something you should keep in mind. But again, you want to check out the vehicle. Is it older than 5, 6, 7, 8 years? Does it have so many miles on it? Where's your credit? Where's your income? If you need more flexibility or assistance, then the dealership's probably going to be your better option. You're going to pay some kind of premium for that. Your credit might take a little bit of a beating with hard inquiries, but on average, they're going to be much more flexible and be able to provide financing in areas that banks and credit unions may not be willing to take. Flip side, if you're in pretty good shape with your financials, good credit, good income, maybe some down payment money, and you have a decent banking relationship with an institution, you can probably shop with these prime, credit unions or big commercial banks, or whatever the case may be, get a little bit of the red carpet rolled out to you, get good rates, probably better rates in most cases, maybe some additional incentives, one hard pull, streamlined process from the financing perspective, and minimizes your time with the dealership. And this is also if you're going to be financing a new vehicle or a newer used vehicle that you can go this route. I wanted to bring this to you because many of us are making this decision relatively often. Most of us are changing cars out 3 to 5 years at a time, every 3 to 5 years, depending on the circumstances. And at the time of this recording, car prices are starting to come down some after being drastically inflated, in 2021 and 2022. The time of this recording is 2023. Car prices are starting to come down to reasonable ranges, and people may be getting back off the fence and starting to look into replacing vehicles or getting new vehicles. So I know this is one of those videos that will continue to be valuable as long as the system is the same on how dealerships do business with financing and how banks and credit unions do it, which is likely to be the case in the foreseeable few years future. So I know this content was valuable for you. I appreciate you tuning in as always. I enjoy bringing you this content. Like, comment, subscribe. Let me know down below what your experience has been financing vehicles. Have you gone the dealership route? Have you gone the bank credit union route? What was your experience? Comment it down below so we can keep the conversation and education going. Otherwise, to all my pioneers out there, I want you to stay focused, stay in motion. I'll see y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.